This is Rod Kusin and Spooman for Risk for Monday, July 11th, 2011. We're taking just a minute or two for this quick video because of what is so obvious here as to what's about to happen and is now happening as we speak. I came down with a bad case of laryngitis and still have it, so this video is going to be brief. But we're looking for a short, and that short is materializing as we speak. We've taken a few short positions in advance of this, and what we expect to happen is that the market will drop back down to the low of the day and will exceed it, the low being 13.50. And on a day like today, and by that I mean pattern of the day, today's pattern is what we refer to as a red day down. The low of the day has not yet been achieved. That's key. The low has not happened yet, not for the day. Now, we've had a low, no question about that. The market has hit a low for the day, but it isn't the low of the day. And so, with the market having rallied up and done a bit of retracement here, it stands to reason then that we should short the market and take a short position and hold that position either until we get stopped out or until the market hits a new low for the day. So let's take a look at what we did. We started taking on short positions right in here, and we're just holding them. Now, I started taking these short positions based upon what we saw happening with the VIX. The low of the VIX was coming in here on the stochastic under 5 on a 7-tick as well as a 3-tick stochastic, and was already moving up on a 1-tick. That happened again here as well as here, so we just added to the position. We look at our volume indicators. Some of the initial volume indicators on the 100-tick and the 500-tick were negative here. We found that right in here, the 1 and the 3 were negative, and then ultimately right in here we have all 3 being negative. We got in a short trade a little bit in advance there. Now, she hasn't started to really drop yet, but don't worry, it will. That's a given. It's a given based on pattern. So trader may choose to take some profits and get in again if they didn't get a good fill, but in any case, the point is that by knowing what the pattern is, you can generally eat up in the afternoon. You know that the pattern today, and you would know this if you went through a course, but you'd know that the pattern today should produce a new low in the late afternoon. We're not there yet. So based on that pattern, that low is yet to come. So it's only logical to short the market if there has been any kind of retracement, which there has. So that's the philosophy behind it, and our intent is to be able to pull nearly 4 points off of the short, because for the market to hit a new low, it's going to have to drop below 13.50, and probably that would put us somewhere in the neighborhood of 13.0 or less than that. Now, our strategy signals just the strategy itself just now took a short. Let me show you that. So the automated strategy pulled short signals right in here. So just as we were speaking. We got in a little bit in advance of the automated strategy. But that's where the automatic strategy pulls us short. In addition to the pattern, we have a couple of very high probability retracement lines there at 1550, I believe it is, as well as down at 14.0 and 13.5 is of course the low for the day, and we should be expecting to see that developing as we move into the final half hour of the day. Now we could easily get there long before that, but the low itself, the low for the day itself should occur right around 2:30ish, 2:30 to 2:45 Central Time, based on pattern. So we'll probably close the trade if we drop below 13, depending on when that occurs. But it'd be nice to get a nice 4-point move out of this, which is what we're expecting. A couple of other things that we want to mention here that you'll see happen as this market continues to drop this afternoon. The VIX, the high of the VIX this morning occurred shortly after 10 o'clock. The low of the day happened here around 12:20, 12:21. The VIX was a bit divergent at that particular time compared to the previous high on the VIX, and so we saw a bit of a rally up. Could have been a nice long trade for those that wanted to counter trend trade. But what we'll see here is that the VIX will exceed 1906, which was the high at 10:07. The VIX will continue to go up, and the low of the day will be associated with that high on the VIX, but I can assure you that the high of the VIX will be greater than 1906. Now, how do we know that? Well, basically, we just study the VIX. Years and years and years of watching the VIX shows us that is definitely the pattern. 90% of the time, a new high on the VIX is going to be associated with a new low on the Spoos, vice versa, and the pattern of the VIX is such that that's how it moves. You will see a new high on the VIX associated with a new low, and since the new low for the day has not yet occurred, new high for the VIX has not yet occurred either. So just watch that. 1906, that's the greater than 1906 is the call for the VIX. And at that time, you'll see the Spoos below 13. So just something to keep in mind. And incidentally, that's notwithstanding the fact that the VIX is likely going to turn down here shortly, at least for a bit. You can see just on a simple stochastic, this is a 7-tick chart on the VIX. That stochastic is getting overbought, and there we just hit 100. That's not unusual. And so the VIX will begin to turn here. It'll come down a little bit, and then it'll turn around, start going back up. So in the meantime, the Spoos are liable to turn around a little bit and start going back up, but that does not mean that the pattern has changed. It just means that's typical market activity. So that won't cause us to change our position on the trade. If you want to be very conservative, you might take profits and get back in, depending on how much of a retracement there is. But we're just going to let this ride and allow this to drop if it will, and it'll then turn around again and go back up. 1906. That's where we're headed. One other thing, there is a little bit of a correlation between the amount of movement on the VIX and the corresponding movement on the Spoos. Roughly speaking, a 0.1 move on the VIX. So taking it, say, from, let's find the spot here. There's 1850 to 1860. 1850 to 1860. That 0.1 move on the VIX is roughly equal to a 1-point move on the Spoos. So given that we're at roughly 1870 right now, and we're looking at 1906, which is a roughly 0.3, maybe 0.4 move on the VIX, that should generate roughly a 4-point move on the Spoos. So if we're here at we're at 13, we'll just call it 1315. 3-point move. Okay, we'll take us down to 1312. So that's why we're also saying, yeah, we'll drop to a new low for the day, just on that premise alone. Now you see where the VIX is now, 1882. The Spoos are just coming into 1350. The volume in there is up a little bit. Now it's at 1350. Volume just turned down, and we should continue to see that drop. Now, sure, could it retrace? Certainly, but 1906. If you really wanted to hold the trade, be prudent about it. Wait till the VIX hits a new high, because that's all about pattern. So you got to take a little bit more risk, but it pays off. Okay, after futzing around a little bit more, the Spoos began to drop off once again. We had another short signal right there at 1349. Let's pull that over. And the Spoos have dropped to 1325. Now we've gone ahead and put in a limit order to exit this trade down at 1312. Just to take profits. Pretty sure we're going to get there. But whether it's that or 1906, the high on the VIX, whichever of those will happen first, I'm not sure, but most conservative approach is just take some profits and waiting for the VIX to go ahead and drop into a new high, or rally into a new high, if you will. Is still a more probable occurrence. Now we just hit 13. We continue down. Let's see where the VIX is. Now the VIX is just now encroaching on 19.0. There we are, 19.0. And we'll come back when that hits 1906. Now, just a comment, as we've the strategy, automated strategy, pulled a long trade in here. We will ignore that. The pattern hasn't been finished here, so that short trade would simply be ignored. Would not take it. Might be a reason to tighten a stop, but with the pattern in need of being fulfilled, we're definitely not interested in going long here. Let's check the VIX. Okay, VIX is still under 19. You already know where it's going. And there's our stop. Looks like we're just getting ready to drop into a new low. Another interesting observation, the standard deviation, the z-score on the VIX was up above 1.5 when the z-score made its biggest turns, and we're here down at 0.46 at the moment. So we've got a ways to go to get back up there, and we're just with it. We're in a quarter of a point right now of hitting our target, and the VIX is still under 19. So it looks to me like well, we'll probably take our profits there at 13.12. By the same token, given the room that it has to play, oh, this could easily go another 0.2, maybe even more. A little further assessment, looking at the histogram of the z-score, hasn't even gone above the 0 line yet. So that indicates, too, we got a ways to go before this thing's really going to turn. So we're probably going to leave money on the table getting out at 13.12, because this could very easily go to, could drop a lot more. Definitely could drop a lot more. So here we are at 2:17 Central Time. That histogram is getting real close to peaking above the 0 line, and I would anticipate at that point it will just continue. She dropped down on this last tick, but as soon as that begins to get above the 0 line, yeah, we'll begin to see the VIX go up above 19 again, and the Spoos hitting a new low for the day. Now, VIX is still under 19, so we're definitely going to be dropping into our profit target and beyond that. Now, if you look at our volume indicators on various tick intervals, 1, 3, 5, 1,000, 3 minute, you notice the positive volume that moved into the market, evident by the green bars. And some ask us, well, you know, when your strategy is saying go long and you're holding a short, you know, aren't you breaking your own rules? Yeah. But that's because not all rules that come into play when we make a decision to take a trade are necessarily reflected in our program. And one of those rules is, of course, the pattern of the day and certain factors that relate to the projections on the VIX. That's not taken into consideration. Why? Well, it's simply because of the complexity of writing program to take into account all of the various potential combinations that there are, and so we try to keep the strategy relatively simple in order for us to take trades. But as you'll learn in our course, there's a lot of other things that a trader can do from a discretionary standpoint once he understands what those potential rules may be. So here, momentarily, we're going to be into the last half hour. As indicated earlier, red day down, low of the day in the last 30 minutes, and that pattern will, in fact, be achieved here very, very shortly. Now, we've already hit 13.12. VIX has not yet hit its low. Pardon me, the VIX has not yet hit its high. We have hit a new low for the day, but that VIX high of 1906 is yet to occur, and you'll notice that it will happen. Exactly where we'll be at that point remains to be seen, but it looks like we could be down at 13.11 or less. So not surprising that the market, after hitting that low bounced a bit. We had some retracements here at 1425, another one way up back at 1317. But I'm really interested in just seeing what happens to the VIX here before the close. So we're going to continue to monitor this. We're out of the trade. That having been said, we'll just watch where the VIX goes from here. It's 250 right now, and we're just about to test that low. The VIX is still below 19, so we've got a little ways to go to hit a new low in the last 30 minutes, and whether the VIX is going to get above 1906 today is now a little bit questionable, because we only have about 10 minutes before the close, and the VIX, of course, will close with the NYSE. So it may be that we'll gap tomorrow, but we'll see. 1894 now. Okay, 252, and we're just about to break into 1311.75. There we have it. VIX is still below 19, so we'll recap either at there. Jumps up to 1904. Look at that. All right, take her right up into 1907 and fulfill the prophecy. Well, we just have a couple of minutes before the closing bell, and in the light of that, with the VIX at 1883, we really just don't have enough time for the VIX to break up into that 1906 range before the bell. Now, that having been said, you can expect to see that tomorrow. I would anticipate, just on pattern, that we'll see a bit of a gap down at the open tomorrow, at least in respect to the open versus the close of today. You could be very easily seeing the VIX, or pardon me, the Spoos sell off a bit more during the overnight market, and of course you should be seeing some evidence tomorrow morning that the VIX has fulfilled that 1906 projection. I would suspect that very, very probable tomorrow morning. So that brings us to a close for this video. Once again, the whole point of this was to show you ways to clean up at during the afternoon based on pattern. And when you know what the general pattern is, you know what the general direction is of the Spoos, and you know the approximate time when your best exit will take place. And for that reason, all you really need to do is have a good system to show you when to take a trade. And that's what we provide here at Risk International. And this is my poorly old voice. Came down with a bad case of laryngitis over the weekend, or Friday last week, and it just got worse. So I'm not doing any demos. I can't talk that long, and I'm just about out of my voice now. So all things being equal, we're going to conclude, and we'll talk to you again later in the week. Rod Kusin, Spooman for Risk. Please come and take a look at our website. Email us, ask for a demo. We'll be happy to help you out. So long. This is Rod Kusin, Spooman for Risk.